All right. Hey, running a little bit behind there. Sorry, guys. It is just after 11. It's about 11:10 a.m. Central Standard Time here on Tuesday, the 3rd of May, 2022. And man, oh man. Coming at you live from yet another overcast, rain coming in day here in Boerne, Texas. Man, I think we've had rain just about every day for the last few weeks. Certainly can't complain about that, and it's not been the terrible spring weather with a lot of the worst things that come with that hard rain and hard weather all of a sudden. But hopefully it'll stay that way, getting all that water back into the watersheds and in the rivers and lakes and everything. So that's nice. Anyway, I'm Christopher Hicks with Texas West Capital, and we're going to look at some charts today, talk about what's going on. Man, Fed. So we got the FOMC meeting this week. We've got unemployment. So we've got the jobs report, NFP there coming in. Non-farm payrolls report coming in here on Friday. I believe it's on Friday, yeah, this week. And apparently the market is pricing in 100% probability of 4 50 basis point hikes by September. That's a pretty strong pricing in there. I don't know, man. Along the way, I think they're looking at potentially 46% basis point hike in June or July. And so this was with on CNBC here, guys. Let's see, I'm put it up over here for you. There you go. So this was off with Steve Leisman here on Squawk Box, looking at what they're potentially looking at. So, man, oh man, 4 50 basis point hikes through September. That'd be crazy. Guys. 75% hike, or 75% basis point hike, 75%, 75 point basis point hike. I can't even say it, guys. You know what? Can we just start over? Anyway, coming in June or July. I mean, that's crazy, right? But, it's really not, because as I keep telling you guys, the Fed doesn't actually make things happen, guys. In the grand scheme of things, the Fed is always behind. It's always chasing. The market always happens, and then the Fed comes in. So, when you look at it, often you're going to see there's a bit of a market rise after interest rate hike announcements. And it's because, the market's already doing its thing. By the time the Fed gets around to addressing that, the market's already kind of, pulled back and it's rallying again. And it just, it's kind of craziness. But, as long as you continue to believe that the Fed actually controls the market, in the grand scheme of things, I think you're going to lose money. You can look at short-term knee-jerk reactions. That's fine. But as far as what's going on with the trend's already set, guys. The Fed just comes in afterward. They don't act, they react, right? And so that's where we are. Same thing I've been talking about for years here with you guys. But anyway, we'll get that checked out. Who's here already? Let's see here. We've got Oscar checking in. First one, says fastest in the West. Hey there, Claudia. What's going on, man? Mike Slade's here. Rico checking in from Turkey. Good to have you here. Jared the Great is here. Nevlusian. HJ is here. Who else is here? Data's here. Tell you, Ryder. ARM, what's going on, man? Dancer Eddie checking in. Oh, you like the haircut? This used to be me all the time. See, here me is my picture here. Beard, no hair. Getting back to it again. Come visit Colorado for sunshine anytime, Tell Your Ryder says. Let me see here. Who's here? Let me see. You're in blue. Nay, Mr. Wilkes. Good to see you again, man. Always good to see you checking in. Martin's here. Travis checking in from Australia. I'm gonna forego the really cheesy Australian accent and phrases for you. Let me see here. Chance checking in from Austin, right down the road from me there, just about an hour away, hour and 20 minutes away. Leo, what's going on, man? Checking in from Portugal, one of my favorite places because they have such great crypto adoption and crypto tax laws are great over there. Still, for now anyway. Let me see here. James Davis, what's going to come in Carson City, Nevada. Great to have you here as well. So anyway, yeah, guys, hey, listen, if you haven't joined us, man, you guys need to do so. TexasWestCapital.com. We'd love to have you there. You can click on this little button right here. It'll take you to our other site, howtotradetowin.com. And then you can scroll down there. You can hit join us up here. You can scroll down. It'll tell you the differences between the different tiers we have. Tier 3 is where it's at, guys. More information, more content, more education. than you can absorb in a single month. We've got well over 200 hours of educational video content now. We add about 3 hours every week from our live streams that I do for Tier 3. So we do live streams on Elliott Wave, live streams on Wyckoff, and live streams on tips, tricks, and techniques, which are oftentimes rules-based strategies for people that haven't ever traded or haven't traded successfully. You just follow the rules. You'll be all right. And by the way, these things we do now, guys, we now have contests every month for our Tier 3 members. And so all you need to do is, let me think, what do you need to do? You just post a screenshot of your entry and exit. I don't care how much money you're trading. You could trade $1 for all I care. I just want to see that you're using something that I've taught and it's working for you. That's what we're looking for. And so your entry, your exit, and you tell us what strategy you were using there from everything I've taught over the last few years. And every time you've got a winning trade with something like that, you add it in there and it increases your entries. And so every month we draw for a free month, man. Free month of Tier 3. So anyway, we started doing that almost 2 months ago. So we had a drawing last month. We're about to have a drawing here in another week or so for this next month. So anyway, yeah, lots of stuff going on there. We'd love to have you there, guys. It's a fun time, a lot of fun. Let me start with this bigger Bitcoin chart here. Okay. What's going on, Dave? Good to see you. Oscar wants to know if a bull flag is forming on the DXY. Yeah, we'll take a look at that here in just a bit. Carlito, what's going on from Belgium? Man, glad to have you here. So here's the big picture, guys. Here's, we have all our stuff that we're watching in smaller time frames. There's a lot of possibilities because there's so much sideways. I mean, like literally, guys, we're sideways here from back around January of this year, right? And then we're even more sideways kind of right in this area right here, right? So a lot of stuff going on, but big picture here. Let me go ahead and change the color on this to what we usually do here with the red. And so I'm still looking at the idea that we've got a wave 3 finish up here, and then we've got a wave 4 triangle printing. And with this wave 4, I'm really kind of leaning toward the idea that we've got A, B, C, D, E, and we're finishing up E, or we finished E. I'm really kind of leaning that way toward the moment, at the moment here. Obviously, if we continue to break down below wave C here, well, it's not, right? But for right now, I'm really kind of leaning toward that. And so what you can notice here, always look left, guys. Always look left. So you can see that we get reject up here where we have this previous area of support, resistance. See how it's support and resistance all the way back for the past, year plus, almost year and a half here. That's where we got rejected. And we're kind of going sideways right now. This same kind of area where we have this other resistance support. We're right here. Now I showed you, I think last week I showed you, really, you see it here with the high volume nodes, right? We got rejected at this second largest high volume node, finding support at the highest high volume node at the moment, right? So a lot going on in this area, but this is what I'm looking at until it doesn't work. This is kind of what I'm looking at, big picture. So in smaller picture, you can kind of shorter term, you have a lot of different options, a lot of different possibilities. But it's good when you have a lot of sideways like that and a lot of possibilities. It's good to zoom out and figure out what is your bigger idea potentially going on here. And so this right here, these labels are what I have here for this, for the Wyckoff, right? So the idea basically, we have this change of character right here, which denotes that we've got this preliminary supply, rally up here to the buying climax, drop on down here to the automatic reaction, which becomes your local selling climax, automatic rally, secondary test. Then we get that higher high up there. We come on down here to potentially a last point of support, show of strength, last point of support, show of strength, potentially last point of support in this area. And here's what I think is going to happen. So your when you're thinking about Wyckoff, you're always thinking about at the top of the range is this your supply, right? This is what's keeping price from going up. And so in Wyckoff, we call that the creek, okay? It's this kind of pink line that I've got going on here. And so when you're doing Wyckoff, if you have an accumulation or reaccumulation area, your confirmation comes on the jack, the jump across the creek. the breakout above that resistance. That is what determines, when you see that, you kind of like, okay, reaccumulation or accumulation, it's done here, and we're basically headed up now. And so what does that mean? Well, what that means is when you get that, you're going to get you should get a larger spike of volume. You should have larger candle spreads, or I guess kind of like this one here, going up through it. You should have a lot of seriousness, a lot of push up through that. Now, if we look here at the range, okay, it makes sense, right? So this area here, where if we look left, this support resistance happens right below, right around the weekly pivot, okay? Just above that is the ascending channel resistance, or descending channel, ascending channel equilibrium, EQ, right? So what you're looking for is, you would be looking for a price to start rallying up through here, and you see volume start picking up, and you see your candle spread start getting larger, and then the breakthrough, this area right here, is where you're going to get, is where you should expect to see a large candlestick like this, large candle spread, and large volume coming with it as well. That's that point where you get enough demand pushing up through all that supply that's sitting there. And so then you get what basically becomes, again, your jump across the creek here. And you might get a show of strength all the way up toward the weekly R1 pivot. And then a pull back down here to this kind of area here as you're back up the edge of the creek. And then you move out. So in terms of a triangle forming here, A, B, C, D, E, this makes a lot of sense, right? You get a wave 1, wave 2, wave 3 headed up, coming out of there. So I think there's, if this triangle is going to be, or if there's a triangle here, I think it's more likely that D is done and E is done or finishing up than it is that we still have, you know, D still to go up here and then E back down. I mean, we could still have that, but right now I'm kind of leaning to the idea that maybe this might be done, something I talked about last week. So we're going to see how it plays out. Now, why? Because if we go to Ethereum, we've got the same idea, right? But here's the difference. Bitcoin, you're going with the volume. You're like, oh, I don't know. I'm not sure that the volume agrees with that. And it does. You know, you've got this descending volume here, right? This decline in volume base right here that we seem to be creating, in which point you have this volume pickup, right? So a lot of demand showing up right here at the bottom, right? A lot of demand in this area here, right? And so with the triangle, you know, again, you're going to get that volume dropping off as the triangle builds, right? And so it becomes a reaccumulation pattern. It's that idea, you know, again, remember in reaccumulation, you're often looking for a steady decrease in volume throughout the range. And then volume picks up at the bottom before it gets ready to rally. And that's kind of what we're getting here. But if you're not convinced there, we can look at the weekly here on Ethereum. Same idea, right? A, B, C, D, potentially E. Same idea, same, you know, rejection up here at the previous area of support and resistance. Right up in here. You see this? Support, resistance, resistance, support, resistance, resistance right here. And then potentially finding support right around this area, which again is that other area of support and resistance. Same thing, right? On top of that, look at the volume. Look at the volume as the triangle is developed here. Look at this volume dropping off, like you would expect, right? And then what happens in this area right here? It starts normalizing. Starts picking up a little bit. You see volume start increasing a bit here. So you kind of build that base, and then you get that rally off that. And so often, that's what we're looking for. Now, again, there are no guarantees in trading, and it doesn't always play out that way. But for now, anyway, until it doesn't, I think this gives us a lot of possibility in that that this pattern is what's playing out, what's going out. And so again, when you're looking in terms of Wyckoff here, you've got your change of character right here, which denotes that you have that preliminary supply, buying climax, automatic reaction, local selling climax, automatic rally, secondary test, thrust up a bit, higher high, higher lows, pulls back for a last point of support, show of strength, last point of support, show of strength, last point of support. And then again, it's going to be this area here that we would look for that breakout, that jump across the creek, right? So it's that weekly pivot, ascending channel equilibrium here. Here is your supply. Here's your creek coming down, right? It's what keeps this in line. It's what keeps this in line. It's right there. So again, coming up through here, we would expect to see volume continue to expand. We'd see candle spreads starting to get larger. And in this area right here is where we'd see the, expect to see the larger candle spread, larger volume, spike of volume as it breaks through this area. Here was the reaccumulation area down, or the accumulation area down here previously from December of 18 to June of 19 here, and then that May of 2020, right? In this case, again, we had our selling climax, automatic rally, secondary test. We had an ST in phase B here. We rallied up. We came down with what was, either a really, really aggressive spring or even a terminal shakeout. I have terminal shakeout written here, but just because usually, that high volume compared to what it was previously is usually a terminal shakeout. But terminal shakeouts then usually spend some time below. They kind of build a little base here below the range low before rallying back up. Usually if it drops down and pops back up, it's a spring. So anyway, we get that. We get our show of strength. We pull back for our test. And so we've got that lower volume on that test. That's what you look for. You pull back. You got a higher low. It's on lower volume. That's a successful test. We should go up. And we do, right? Here is your jump across the creek. Again, this is your supply, kind of keeping everything there. Here's this. You can draw a diagonal resistance here. But again, it's that breakout there where you have that expansion of volume as you go up. And it pulls up, show of strength, pulls back. It retests that resistance as support. That's your back up the edge of the creek. And then you rally off, right? Same thing we're looking for here. We're looking for the breakout, the pullback, continuation up. And so that's kind of where I am with that. Now, I mean, we could probably draw this like this, to kind of maybe get a little bit better there. And so, yeah, again, it's just that same area there that you're looking for that. But I think the volume price action on Ethereum here is a lot clearer than what we get on Bitcoin here for many of y'all. And that's why, when we're looking at comparisons, because guess what, guys? If Ethereum's going to break out and rally, Bitcoin's not just going to sit there. Bitcoin's going to go as well. These are the two largest, right? These are the two, you would argue the two most important cryptos in the space, right? So it's not like one's going to happen, the other is not going to go with it. They're going to go together. So potentially a better looking pattern formation here on Ethereum than what we're getting on Bitcoin, but the same idea nonetheless, right? Let me see here. Let me see. Yeah, so that's kind of where I'm at, guys. At the end of the day, everything else aside, the same thing I keep telling you guys about, we need an impulsive breakout above the weekly pivot. That's really kind of where we're at. Forget counts, forget everything else. We need a nice impulsive breakout above this weekly pivot and really above the swing high here at, was that 52,000? What is that? 52,100 here. That's really what we need. It's that swing high just above the pivot. If we can get an impulsive breakout above that, we should be good. So that's kind of really what it boils down to if you're really interested, right? Now, if we do break on down, of course, my target here is this weekly S1 pivot down at the 26,300 kind of area. If we break down below the swing low over here. It is possible, if this is A and this is B, it's possible that this, is A, B, C, and we can get a C. It just can't drop below here. So in the grand scheme of things, if this, this current potential triangle I'm looking for here is not correct, we break down below wave C, it just means that it's possible we could have a larger wave C playing out, WXY or ABC. It would just have to turn around and reverse prior to wave A here. It can't go down below wave A. If it does go down below wave A, minimum target of the S1 pivot there, but really have to kind of look at it because what do we have here then, right? If we're going to break down below that swing low, what do we have here? Is this 3 and then this is A, B, C for 4? But remember, guys, everything else aside, even if we get the breakout above here, which I believe that once we do, we're going to get to new all-time highs, the reality is we have to actually break out above the all-time high. We have to break out above 69,000 on Coinbase. Because until that happens, we're going to be completely wrong on the count, right? But once we break out above that area, once we break out above this, this right here, we should be good to go. So we can say that it is possible that we've got 3, we've got 4, and maybe we've got 5 here, and we're done. It's still possible. I'm not going to sit here and lie to you and tell you, no, that can't happen. That can't possibly be true. Sure it is. I don't think it is. I don't think that's 5. I think we've still got further up. But, again, we've got to get through these areas first to really kind of, get that in there. Until then, we could definitely still fall further down, guys. This could be wave 5. So it's just, it's just this idea that you have to keep your mind open. You have to understand what are the possibilities, what's going on with the chart there. Don't get married to any particular position. As far as the triangle thing goes, until the triangle breaks down or something weird happens over here where it says, well, it doesn't fit anymore, there's no reason to think that the triangle isn't printing, right? I mean, we've got price action and volume and contracting price action, that seem to suggest that there's a triangle pattern forming or having formed. And it's been going on a long time, right? We've been having distribution up here since June. Well, this is Ethereum. Since February, January, right? This area over here of last year. Now, you might go there and go, yeah, there's the thing, Chris. Bitcoin always has a blow-off top. What we think is a blow-off top, and then it comes down, right? Distribution never sits at the top for a year like that. Goes up, comes down, and then kind of goes sideways in some sort of redistribution, and then continues lower. Yes, it does. And so maybe it's okay to look at that possibility, but the reality of it is, guys, this does not have to be like any other time before. For right now, the price action and volume doesn't seem to suggest distribution here. Your volume continues to come strong at the bottoms, not so strong at the top. And so often, what that means is you've got your bigger players absorbing. They're absorbing down here in the lows. And so you're getting higher lows off that on lower volume. That's usually indicative that the range is finishing up and we should continue higher. But we do have to continue to be, aware of what else may be going on there. Just in case it doesn't play out like that. Atlas Crypto, what's up, man? Could I take a look at total market cap? Yeah, remind me here in a bit. I'll see if I can pull that up, okay? Let me see here. But yeah, so, again, guys, I just don't want you guys out there. I look at Twitter, especially because that's where a lot of the crypto's happening, right? But in any social media, we can look at the Facebook groups and everything as well. And there's a lot of this idea that price has to do what it's always done. Price never has to do what it's always done, okay? Distribution, accumulation, they come in different flavors. They look different, they can develop differently. And I don't want you guys, I don't want you to be so stuck up into your own, what you think, that you can't keep your eyes open and your rationality going. You can't keep your logic going. Not just on what you're looking at, but what may possibly be happening. Because as a trader, you have to be open to the possibility that you're wrong. Every time I go into a trade, I know where my invalidation level sits because I don't care how strongly I feel about it, I could be wrong. I've been doing this long enough. I've lost enough money to know that I could be wrong. I am never that sure that I'm just going to blindly go put in money one way or the other and not worry about it. Always know where your invalidation levels are. So for in that regard, I was in that Aussie USD short at the end of last week. I closed that out on let me see here. I closed that out on the 1st of May. That was the one that I got in at what I get in at here? It looks like 0.71585. No, that's not right, is it? I hate when I can't read this right sometimes. But yeah, but I got out there at 0.70527. So however many pips that was there, was that about 106 pips or something like that? So I got out of that. And then I got in another short, for just a few pips there. And I'm short right now with the Euro USD from this morning. I just did this at 1.05501. So right now that puts me at about, we're getting a little bit of a rally locally, but I'm about 27, 28 pips in profit at the moment here. It was about 35 before we started getting this little rally. But yeah, so, again, and so what happened? So the Aussie USD, I did that, and then I entered a position because it broke down a little bit further. And I told Discord I was going to do this, a portion of Discord there. And I got stopped out. Which was a good thing because price continued to rally higher, right? So I'd gone short. So I closed my position, and I said, okay, if it's going back down below that, I'm going to go short again. And I went short. And I got stopped out. It went the other way on me. But had I not been if I had just been so sure about myself and said, you know what, I'm just going short, I'm not worried about it, that could have liquidated me well higher, lost a lot of money on that. But I'm never so into myself that I think that no matter what, I'm going to be right. I always know where my exit is. I always know where that invalidation level is. I tell you this, guys, so that you take that same mindset. Because too many of the people that you watch online talk in absolutes. I'm so sick of hearing absolutes in trading. The only absolute in trading is if you always talk in absolutes, you're going to lose all your money eventually. That's really it. I don't care how good the setup is, guys. You could miss something. Make sure you understand how price could move differently than what you think. And if it does, at what point is that most likely happening? Because that's your invalidation level. That's when you need to be out. Doesn't matter if it only goes a little bit further and then turns around and goes the other way. It's just if it gets through that certain area where at that point it's more likely that you're wrong than right, you need to be out. There is no reason to sit in that trade. Okay? I hope this gets through to you guys because, again, I just see so much nonsense online with absolutes and guarantees about price action and everything. And you guys, if you're newer, if you're not consistently profitable, you're going to think that that's cool, that that's great, that that's what's going on, that that's what's really happening. And you're going to end up losing a lot of freaking money following that nonsense. Okay? Man, I just need to say, guys, risk management is what it's all about. You will not become a successful trader without proper risk management. Okay? Period. If you don't want to hear that, I'm sorry. Risk management's boring. It's not very fun, I know. But it's what saves your rear end at the end of the day, okay? All right. So locally, what's going on here? I've got this potential bullish count on here, but it doesn't really mean a whole lot. As I tell Discord, what we're looking for is a breakdown below wave X here, which would be 37,401, or a breakout here locally above wave X here at 38,643 and 48 cents. If we fall down below wave 2 here, all that says is that wave 2 may still be in progress. So then we'd need a breakout probably above what is labeled wave 1 here at the 1 hour pivot. Right there around 38,895 or so. Okay. If this count is correct, 1, 2, 1, 2, wave 3 is going to have a target up here of around 39,540 or so. Your larger wave 3, wave parentheses 3, has a minimum expected target up there, just at the daily pivot, basically, right around 40,936. But just because I have this count on here does not mean that I think that's definitely what's going to happen and whatnot. This means, listen, until we break down, this is possibly what may be going on here. If we do break down below wave X here, Then the first place I want to look is this S1 pivot on the 1 and 4 hour, right around 36,975. And then 35,968, followed by 33,613. Those are my targets to the downside. If we do break out and start rallying here, so you've got these Elliott wave targets, but importantly, we have this swing high right here at 40,817. This wave B, I don't know why this keeps changing on me here. It says 43,000 again. It's either 43,000 or 43,109.50. You guys saw it change the other day on the thing. I don't know what's going on with TradingView with that. And then, of course, we have this swing high up here at 48,240. So, those three levels here, here, and here are the main ones you're going to watch if it rallies up. If it drops down, again, you've got those three targets. Other than that, interior-wise, again, maybe we've got this done. Wave E may be done here. And this could be, leading diagonal, pull back, 1, 2, rally up out of there. So we will see how that plays out. Okay? There's no way to know for sure. But, again, big picture. Oops. Big picture is we have to move up aggressively above that weekly pivot. It's the same thing I've been talking about for a while now. Nothing's changed. Okay? We can notice, as far as price action and volume goes here, you've got these large candle spreads getting to smaller dojis and then smaller candles overall. Right here, you can see that the volume starts picking up over the next few weeks. Even though it's dropped a little bit further, the candle spread, you had this large candle spread. You have this large candle doji with a small candle spread. You have a bit larger candle spread, but a much smaller candle here. So, again, supply is still winning out here, but more and more demand is showing up. So, quite possible that we could be getting a bottom in this area, which would make sense. Look at where we're bottomed out here, right? Same place. Or into this wick, or into this wick down here, into this demand structure, or this demand structure. So those are those red targets. That's the EQ of this demand structure, and then the EQ of this demand structure right here. Those are those red targets on the way down that I'm showing you right here. 35,968, 33,613. Okay? So, that's really where it is. Yeah, there's more than a few things to talk about. It's not a simple, we're going up, we're going down. That's stupid. That's way too simplistic, guys. Especially when we've been going sideways. February, March, April, May, yeah. Been going sideways, almost 15, 16 months here. To simply say up or down, I think, really puts you at a disadvantage. Unless you're just trading this weekly time frame, and you're short from up here, or you're long from down here, or long from down here, or short from right here. If you're doing that, then you can say, okay, up or down. But if you're talking about anywhere in here right now, up or down, I think is just silliness. Because there's too much possibility in this area to just assume one way or the other. So yeah, hope that makes sense, guys, okay? So that's kind of what I'm looking at there. Let's look at the DXY here. So here's my look at the DXY. Again, as I told you last week, this rally up here, man, this did it. There is no reason that you should be bearish on the DXY at this point now. We have now broken out. Other than short term, when I say bearish, I mean the whole idea that we're going to drop down below 88. If we look here, let me go put this on 3-day. Yeah, there we go. Look at this. We are well above the previous highs over here from 2020, right? From March of 2020. This is that March drop that we had in stocks and crypto. That's this rally up in the dollar. Okay? We are above that. And significantly above it. As a matter of fact, look at where we pulled back to, guys. Let me put this line here. Look across. All we did was pull back to this previous resistance. And here we are rallying back up. Interesting, right? We are above this point over here, January of 17. We are above that. And we're above that. Again, this is all, remember, this is coming off this low, coming off of March of 8 here. March of 08. So this was really kind of as we got into the GFC, the Great Financial Crisis, right? Low, high, higher low, higher high, higher low, higher high. Now, this is bullish market structure, guys. Stop listening to the yahoos online. They don't know what they're talking about. The same guys that were telling you it was going to keep going down from here. Stop listening to them. They don't understand. They don't know. Okay? We are bullish since the Great Financial Crisis, in spite of printing 85% of the dollars in existence. Why is that? Because the demand for the dollar continues to increase. Not just stateside, but Eurodollar market. This is why we're doing this. In 2011 here, everybody thought the printing, the first QE, was going to take us down, new lows. It didn't. They thought, hyperinflation. That's what they were thinking back then. Same thing over here. Everybody thinking hyperinflation. They don't know. They don't understand. And you got a lot of people up there with all these big, great credentials and whatnot, and they don't understand either, guys. Stop listening to people that are so absolute in the things that they say. I've talked about this rally off here since we did this, right? But always giving you the other side of it. Always saying, listen, if we're dropping down below this level, then we're likely headed lower. We're likely going to head down. And I gave you those lower targets. But I said, as long as we remain above that and then we reach this next target, guess what? It's going to increase the odds that we're going to continue higher. That's exactly what we've done, guys. Think of how many people you've listened to since January of last year, almost a year and a half. How many people you've listened to telling you the dollar was going to go lower. And if you traded on that, you probably lost a lot of money because of that. I have made a killing in the Forex market, in the FX market right here because of this. Because the dollar's continued to rally higher. It's been an easy trade. Shorting the Euro USD during that time has been the easiest trade of all markets. Today, still, is the easiest trade of all markets, guys. Legacy, crypto, whatever. Because what happened in crypto? Bitcoin's gone sideways since since about that same time, right? We've gone sideways here. We rallied up and then pulled way back. And then rallied up and then pulled way back, right? It's not been an easy trade here. We're going sideways. There's a couple of easy trades, right? But it's been sideways. What's going on with legacy? Markets topped out, right? NASDAQ topped out in November of last year. S&P, the Dow, topped out in January of this year. Not a lot of convincing going on yet. People still think we're going to go to new highs. And, I can't say we can't, but it seems to me overwhelmingly the evidence says that we're going to head down lower, right? So let's kind of take a look at that real quick here. You see here. Yeah, so there's your, here is your DXY, right? In classical charting, this right here is a rectangle pattern, right? And the breakout through that rectangle pattern usually denotes continuation of the trend. This is a pause, continuation. In terms of Wyckoff, this becomes, if this is just a pause in terms of, in relation to just continuation afterward, this just basically becomes reaccumulation here, right? Accumulation, reaccumulation, continue higher, right? So yeah. Now all we need to happen right here, look at this. This is the 1 hour. We came here, we basically tested the pivot area, rallied up, got rejected near the highs there, pulled back again into this base right here, rallying up, looking for a breakout here and here to head higher. Continue up. Again, we're sitting here at 103.5 right now. 103.5. We went all the way up here to 104? Almost 103.928. I don't know if anybody was saying that somebody else had to have been saying it. I'm not stupid enough to think I was the only one saying it. But I was one of very few people talking about the fact that we were hitting 100 plus, most likely. Everybody else was looking at 80s, 70s, 60s, right? Why were they saying that? Because of the Fed, because of all this stuff going on, all the money printing, right? And yet price has done completely the opposite. I say price, the DXY has rallied completely opposite, right? So, again, my point is, be careful who you're watching out there and listening to, especially if they speak in absolutes, especially if they speak in guarantees. There are no guarantees in trading, guys. And there's even less of a guarantee in trading when you don't have the requisite background, when you haven't been through multiple cycles, when you haven't made that connection between what's going on and what may happen. When you don't understand, and get this, I'm going to be honest with you, most, even your people that are on CNBC and whatnot, don't really understand how the dollar works. They don't understand, from the time it's printed at the Fed, how it makes things move everywhere. I'm sure I don't know everything there is about it. But I know enough that I'm usually pretty correct on it. So far. Doesn't guarantee I'll always be. But I've got enough humility to understand that, guys. And to always show you, always understand where is that invalidation. That's today's theme, invalidation levels. You have to understand where they are. And where your validation levels are, okay? Doesn't sideways for that long mean distribution instead of accumulation? No. Why would you think that has to mean distribution? I think you're talking about BT. Yeah, I was asking about BTC if you view this late. Yeah. No. Again, usually in distribution, what you're going to see is a lot more your volume levels throughout the range kind of staying the same, staying up near those highs. Because, again, if you've got a lot of volume coming in at the top, it tells you that there's a lot of selling going on there, right? But you look at the volume because retail is not calling. Jim's not calling Joe, calling Sally, calling Amy, saying, hey, let's all sell at this price or let's all buy at this price, right? They don't have that coordination. Your big volume comes in because there's coordinated selling at the top or coordinated buying at the bottom. And the only way that happens is by your big players, those who control a lot of supply, right? Or a lot of capital to buy up, right? Because they're the ones that can go in there and say, at this level, I'm going to be selling. At this level, I'm going to be buying, right? And so that's why we look for those volume. Where's the volume coming in the range? That's what we want to see, right? Huge volume down here, right? Big volume again coming in this drop right here, right? And then volume again coming in here. And in each one of these, you've got these large lower wicks, right? So, everything's showing up demand in that area. And as it gets lower, the volume's dropping off significantly, which means there's no real supply left to come in this area. Should be headed up, and sure enough, it did, right? You rally back up, and look up here at the top. This is your volume way down here. Not a lot of volume coming in. A little bit extra trying to come in on the drop here to push through this, level of support here, right? Let's get back over there. And then a little bit more coming in here, right? But again, wick showing up, rallies back up because of this, this area right here. This is where that demand's coming from. Now, when you have that, the next question becomes, is there follow through? Does price continue in that direction or does it reverse? So it's not just enough that there's a lot of volume coming in here and a nice wick on the bottom of that. Did price continue up? It didn't. It continued down. So, okay, so supply still in control till we get down here. And look at this significant bit of volume over these 2 weeks. Look at the change in the candles right here. With the same amount of volume, a little bit more volume in the second time. More effort or similar effort, much less result. You had supply completely in control, and then you had demand in control. And then there was follow through higher. And so off this, we have a low, a high, a higher low, a higher high, and potentially right now a higher low. We have bullish market structure off the January 24th low, that weekly low. But we've ran into resistance right here, right? This area right here. So if we can get in, it would take an impulsive breakout. You need to see a larger candle spread, larger spike of volume breaking out above this level to signal the bottom's likely in and we're probably headed to new all-time highs. Most likely. Again, no guarantees, but based on structure and pivots, Yeah, most likely that's what's going to happen if we break out above that level on that expanded volume and larger candle spread coming through there. So yeah, all the time means, whether it's distribution or accumulation, the longer it takes, the longer you go sideways, the stronger and further price is going to break out or break down. That's all it means. It doesn't mean that it's distribution or it's accumulation or whatever. The length of time in the range means nothing, other than when it does break out or break down, it's going to go stronger and harder the longer that range develops. Okay? So that's all that means there. Yeah, you're not going to go here and go, oh, it's been over a year here, so it's distribution. No, not at all. Not at all. It could be. Sure, it could be, but the length of time itself doesn't say that. Yeah. Great. Joe Ryan, well, I appreciate you, man. Thank you, sir. I appreciate that. Yeah, so anyway, so here we are looking for the breakout coming up here. I have got, let's see here. If this count is correct right here, this is, I don't know why I didn't have this set, but this is going to be a wave 3 target up here of, by the way, you can trade the dollar on the ICE exchange, guys. It's the only place I can think of that you can trade the dollar. Trade dollar futures. Yeah, so we're basically right up here. So that should get us right up there. Go ahead and change this sub-micro here. Say up there around 104.5 is where we should be headed up to. 104.537. If this count is correct right here. That'll give us 3 there. And 5 of 3 here is likely to be at about 104.894. So that's where I'm looking on a breakout above wave 1 here. That's kind of my target area. Again, guys, remember, if that's happening, you should be shorting the euro against the dollar. Remember, they're almost identical in their movements because the euro makes up that 57.6 or 8% of the DXY's weighted value. So, makes up almost 60% of this value here. So they generally look pretty similar. Again, I remain short. Looks like we're trying to drop down a bit more now. 35 pips from 1.05501. Current price 1.05153. So, yeah. I mean, again, been the easiest trade there as far as it goes. The other thing we got going on this week is the RBA, the Royal Bank of Australia, I believe, is going to have, or did they already do it? I got to check again. But pay attention to what they're saying. I think their inflation is going up there. I think they're going to start getting hawkish, or have started getting hawkish, really on that. So that could be a little interesting. But I think still money to be made on the, shorting the Aussie against the buck right now, I think. So, yeah. 83 Mad, what's up, man? Always good to see you. Travis, yes, sir. Thank you. You said Australia raised rates? Yeah, okay, that makes sense. That's probably, that would explain why I got stopped out on that rally up. Yeah, for some reason I was thinking that was coming out like tomorrow for me. I thought it was coming out on my Wednesday. But I got behind on stuff, forgot to check. So, okay, that makes sense. Yeah, that makes sense. So, there it is. Let me see here. Let's take a look at oil here, guys. Let me see. Oil. What's going on with oil? Invalid chart link, huh? Really? Let's try this again. There we go. All right, so oil right now, I've got the possibility, still the same possibility here, 1, 2, 1, 2, and then 1, 2, and maybe coming down. We had this nice rally yesterday, and I thought this might lead us up into a higher high here, maybe make this like a 1, 2, and then 1, A, B, C for 2 here. But we're dropping pretty good right now. If we drop down through this 4-hour pivot right here at this high volume node, the daily pivot, as you can see, is right there in that same area. If we drop down below that, that's going to be the first real clue that wave 2 is done here. Dropping down below 99.80 should add confidence to the count and give us a wave 3. Minimum expected target down here of 85.80. Again, if we do happen to rally and break out above wave 2 here and head up above this wave 2, which is right nearby, for now I'm just going to look at this as an A, a B, and a C working out and get us an initial target here at the 4-hour R1 pivot right there at around 110. Secondary target of this supply structure EQ at about 113.5. So if it does break out above wave 2 here, potentially here, maybe here. And that's what I'll be looking for on that. But again, oil prices, kind of letting you know how the economy's doing, right? If oil prices are dropping, usually that means the economy's cooling off, right? Everybody's still talking about hyperinflation, but the reality is, if you watch the government numbers, spending power, personal spending power is dropping. So people don't have as much money to go out there and buy stuff, right? So what's one of the contributors to inflation and price, to rise in prices? It's a whole bunch of money going off a limited or heading after limited products, right? So if you have more money coming after those limited number of products, the price goes up. Those who really want it, get it. Those who choose to eventually use their money elsewhere, right? So we've got that happening. So that, should be cooling off the economy. I talked about already, I think the economy, the inflation's probably just about topped out, if not already topped out. So what's the Fed doing, coming in and being really aggressive with interest rates? They're behind. They're behind it, guys. They're always reactionary. What the Fed does happens after it needs to be done, right? After it would needed to be done. So stop thinking that the Fed controls the market. They don't. They're a slave to the market because they're always found always late. Right? They were late jumping in on inflation, and now inflation's pulling back. Like I said, I think it's topped out. People have less real income to buy things with, right? All that, and then on top of that, all that government stimulus is no longer, right? The only thing helping people here in the U.S. right now is the fact that the moratorium on the student loans has been extended through August, right? And let's be real. Biden's talking about maybe a $10,000 student loan forgiveness thing. How many people is that really going to help? I mean, honestly, you look at student loans being upwards of $100K in balance, right? 10 grand is nothing. 10 grand is nothing to somebody that owes 80,000, 100,000. Their payments are still going to be out of reach for themselves, for them. So does it really help out? I don't think so. I don't think it has the kind of effect they're hoping. I think they can go out there and say, oh, look, we did this. Kind of like a talking point, right? But I don't think it really does anything for, as far as helping, people with spendable income. So what I'm getting at is their income, it's less real money that they have to actually spend. They have no more of all this stimulus they've had. And so how are they going to contribute to pushing prices higher? The only thing that's really going to kind of contribute to that is still pipeline bottlenecks, right? Production delivery bottlenecks. So what's the Fed doing? The Fed comes in, start raising rates. They start making things more expensive for everybody. They start making it harder for everybody, right? All of a sudden, the loans, the APR on your rate, on your credit card, all these things. If you've got an APR on your home loan, Lord help you. Things all of a sudden become a lot more expensive. Life becomes a lot harder, right? Which means, guess what? You have even less disposable income to spend on other things. Just like companies, right? I talked to you about it. The interest rate rises. These companies that are, full of debt, all of a sudden, they can't do the things that they need to do. They can't increase production. They can't become more efficient because that all costs money to do. And they're spending more of their revenue on servicing their debt that they acquired, right? The debt, especially they've acquired over the last 2 years. spending more money on that debt. They can't do all those things they need to do. And on top of that, they're going to start having less and less revenue. Look at the earnings. Look at Netflix and others, right? And so now you have to service your debt, more expensive debt, with less revenue. You're even worse off. So now people start getting laid off. People get laid off, guess what? They can't make their house payments, their mortgages, right? Houses get repoed. Foreclosed, I guess, what you call it, repoed. Somebody come in and just put your house and pull it off, right? No. But, really. So how does what the Fed's doing help anybody? Doesn't really, right? They can't YOLO into Doge at 70 cents on Robinhood. LXT, what's up, buddy? Always good to see you, man. When Moon, 83 Man wants to know when the range is done, if it's accumulation, which again I think it is, but we'll see if we can get that jump across the creek that we're looking for sure. Let me see here. You want me to look at the total? What is the total? That's total crypto cap. Let me see here. Do I even have it? Let me look here real quick. And we'll talk about, before we do that, we'll talk about, since we're looking at oil here, we'll look at some natural gas as well. Especially, again, because I know many of y'all live over there in the Euro area. And, yeah, natural gas prices are a real pain in the rear end for you guys over there, aren't they? Just so much of what you have requires that natural gas. Let me see here. Crypto total market cap. This is total, right? I'm trying to get it set up here before I jump over there with that. Okay. So yeah. Again, from here, looking at it being a leading diagonal, wave 1 ends just above wave X resistance here. 2 pulls back. Gives us a wave 3 expected target up there about $8.71, which gives us, we've got this wave 3 target up here at around $9 and almost 35 cents. So, again, still further upside on that. Now, the thing about that is, if you look at GSG here, so this is your iShares GSCI Commodity Index Trust Fund. And this particular commodity indexed fund is actually really more heavy weighted toward energy. So, your live cattle, stuff like that aren't such a big significant input on that. Okay? And so it looks like we've got a triangle going on here. Maybe A, B, C, maybe D, and E finished off here. And so we've got one more higher high to go here. Now, I think, it's possible for oil as we watched it. Again, I was talking about maybe 113, something like that, maybe even 115 up that kind of area. So that rise would help this go up. It's all different oil product or energy products. Energy products. We've also got, again, what we were just looking at there on natural gas, which has higher highs still in. So that could actually pull that all up there. There's not a big... if you look at this, you go, oh, commodity index short fund means, gold's going to rise. No. This is more energy situated than precious metals, than gold and silver. Those, again, this is very much energy related. So it looks like we've got one more wave up to finish off this. So potentially from down here, which means you could have a strong drop at least down toward this 15.5 area. So we might pop up here around 26, maybe a little bit higher, and have to fall all the way down at least to the 16 area, if not lower. But at least a high volume node around there, 1580 to 16 or so, around that area. So that, that's going to be, that means energy. Once we get this pop up here and do this a little bit, energy should then overall should just have like this big move down on that. All right. Let me see here. Let me come in here. So yeah, so you guys are wanting a total here, so we'll go ahead and pull this up. I've got this chart that I had. I'm not sure when I did this chart. But I was looking at potentially, what was I looking at here? Another wave up, a wave on the pullback here, it looks like. Yeah. So for me, looks like I have this as a WXY on this pullback here, locally. And so that pullback is actually around 70.5%. That's the institutional retracement level. You can see that we had a dip here with this nice lower wick. We got another dip, higher low here, wick, low, high, higher low, higher high, potentially higher low here. So, I mean, if this is correct, ABCW, X, ABCY coming through here. 1, 2, 3, 4, 5. Yeah, I mean, it looks like we're just pulling back to this previous area of support resistance here. Resistance, support, support, and then potentially going to rally up off that. And if we are, then we should break out above this all-time high up here at just over 3 trillion, right? Let me see here. Yeah, that's what I look for. So what am I looking for? I'm looking for a breakout of this descending resistance right here. This looks like a possible descending wedge forming here. And so if it is, we should see an aggressive push up. We should see larger candle spreads, see some volume printing out as we break out above that wedge resistance and that this is the daily pivot right here. We should see that. How's that weekly look? Let's see. Yeah. 1, 2. Let me see here. Okay, if I'm looking at this, backing into this, it looks like maybe 1, 2. 1, 2, 3, 4, 5. So 1, 2, 3, 4 is a triangle 5. 1, 2, 3, 4. 1, 2, 3, 4, 5. Okay. So again, looking at that same kind of Bitcoin topish area as wave 3. And then ABC. This looks like 1, 2, 3, 4, 5. So as far as total goes, I mean, I can see this is 3, this is 4, and this is 1, 2 heading up. If that's the case, then 5 should be up here around 5.247 minimum. How did I miss that? Try it one more time. Just put it like that. Right in that area there. So, you know, that would kind of be the expectation. So we get a 1, 2, 3, 4, 5 up there to finish out 1, 2, 3, 4, 5. So if I'm looking at that, I know you guys are probably looking at this going, oh, look, it's a head and shoulders, right? Head, left shoulder, head, right shoulder forming. For me, I would have liked to have seen this come closer down toward these lows here. And not, it doesn't have to be like way down there, but maybe like right here. This would definitely need to continue up here, getting closer to these highs. If I was to look at this as probably a potential head and shoulders. But I don't like the structure of what would be the right shoulder or the right kind of area here, coming off the head and the right shoulder. It looks too out of proportion to the left side here. And there is this idea of proportionality in head and shoulders patterns. So yeah, we'll see. We'll see. But right now, I think that maybe 1, 2, 3, 4, potentially 1, 2, 3, 4, 5 up there to around 5.247. Why is that disappearing on that? I must be doing something wrong. Yeah. Anyway. Yeah, it's not showing up there. I think it's because of the points there. They got to put in all the zeros in there, so I don't care. I won't put them in there. Close enough. I think that's what's going on. Again, from this structure here, again, look at structure, guys. Look what we got here. You had this right here, right? From this pullback here, this preliminary supply, right? And then you build this base right there in it, right? Forget the wicks. Just look at the candle spreads here. And look what we've done. Just wicking right in the top of it and taking off, printing higher lows and higher highs. All we need is this aggressive push to take us out and above. Larger time frame here, the weekly, for a breakout above that. Yeah. Could this be a triangle here? Sure. I think if it is, though, this, is 1, 2, 3, 4, 5 here. So that's an A, B, C. Or this is a WXY, so this is A, B, C is W, X, and then A, B, C is Y. So yeah, this could definitely still be a triangle, the same as Bitcoin right here. And you just get the same idea, A, B, C, D, E. So yeah, I think that's definitely a possibility in that, especially with Bitcoin potentially doing that triangle. So either right now you're going, yes, or you're going, shut up, you're an idiot. Things are right now, right? Atlas, you have the same thought about the head and shoulders? Yeah. I really don't think it's forming one. You have this huge shoulder here, which is great. This looks good. This doesn't look good. This looks good here. So it definitely looks much more like a triangle here. You get the wide, a running triangle. You get this wide A and B, and you consolidate there into C, D, and E, just below the pivot here, right on top of the support, and then boom, pop out and move higher, right? Yeah. Yeah, it's really good, guys, especially when you're going sideways, to use that longer time frame. I know a lot of you really hate the longer time frame, but you should always have it on there. Because when things like this develop and it becomes all this sideways, you're going to want that. You're going to want that to save your rear end. By the way, you can note here, as this range has developed, volume has dropped off, right? But again, what's happening in this area right here? Look at this. Look at this kind of area right here. So prior to that, volume's dropping lower and lower, right? Here, in this area across, you're getting support in volume, right? So again, another thing I'm looking at going, yeah, it looks like it might be done, and it's building that base to rally up off of. What's up with the volume the last 30 days? It looked fake, static on the D1. Last 30 days. Talk about this right here. Oh, again, that would be explained with the idea that that in this area, again, that base is building here, right? And so, this is built off, this particular one, like Atlas said there, is an index here. Which means, it's a culmination of all those different things that make it up, right? But I think the idea is that during this whole area, you're building that base. Again, the same thing that we've got on Bitcoin right here, right? Even though it goes down a little bit more on Bitcoin here. Same thing on Ethereum though, right? Same kind of idea. Even though it has a little bit of a dip there. Oh, use the last 30 days. You were looking right here though. But yeah, it's the same idea. You're building that base sideways. And so price is already consolidated way down from over here, right? Where was I at? There we go. Yeah, and so, it's kind of already kind of just consolidated. There's not a lot of activity going on. Volume kind of just levels out at times like that. Yeah. Yeah, no, I think it just has to do with that. There's just, again, this is going to be related to what's going on. And if everything else is kind of flat, even if it's a little bit more, a little bit less, if it's all generally in the same area, I mean, it's going to look kind of flat in this area here. Yeah, it's just, I think what it is in this area. I think that's all it is. Let me see here. Let me see. Okay, so silver here real quick, guys. We're just about done here. Let's take a look at silver. Silver breaking this range here, trying to rally up a bit. I've potentially got this as a 3-4. This could still be A, B. This looks like just 3 down. So it could be A, B, and then C for 4, and then 5 to still come down. Just kind of watching it kind of play out here at the moment. Not a whole lot getting excited about it here. On the 4-hour, we're almost broke out into overbought. So looking for, it's just having this trouble right here with this resistance. Resistance right there. But, nonetheless, still looking for further downside with it. Gold, I think gold's a little bit more aggressively downside. Yeah, it dropped down a bit more here, and then it's rallying up a bit. I think this may be 5 down off wave 2 up here. So 1, 2, 3, 4, 5, finishing off with an Indian diagonal 5 of 5. And if so, we're coming off this bullish divergence here and oversold on the 1-hour. And so initial target is this 23.6, which we're just about there. Secondary target is the 38.2 up here. And then we can look at the 50 at the 40%. We'll see how this plays out. And this count may be off here, but overall, we should be looking for price to be rejected in this area at the most and just continue lower. We've got a wave circle 3, minimum expected target down here at 16.92 and 70 cents. So if we're breaking down below that swing low there, we should be headed that way. That weekly pivot sits right there at 18.21 and 90 cents. All right. So that's kind of what we're looking, what I'm looking at as far as that goes. Again, guys, nothing really changing here. Let's check out TLT here real quick. TLT has not made a decent move up yet. At least prior to the beginning of this week, it hadn't. It's possible it could be bottomed out here. Let me see here. So we've got this bullish divergence and oversold on the 4-hour RSI. We've got the drop down on the Stochk RSI into oversold and threatening to cross bullishly now. Right here around this S2 pivot. Oops. Let's go to the daily. Again, daily's got this bullish divergence as well. We could see this curl. It's starting to curl here. We can see it rally back up as it continues up. We really want to see, it's not good enough to get above that 4-hour pivot right there. I think the daily pivot's where it's at. You have to get above this swing high right here, which is 124.30. And I think if we do that, that'll be the first real clue, hey, that bottom may be in and we're headed up now. And then you're going to want to look for a breakthrough above wave A as your first real clue that it has. This is kind of like a hinting that it has. This is more of a clue here. 133.19, getting back up into the wave A. You can see that we're following this descending kind of channel thing here. So I've got off the swing high, swing low, swing high. So we're just about bouncing off that swing low there. So that would kind of make some sense. This is five waves up. 3, 4, 5. The pullback is into wave 4 here, which is what we usually look for. So if we can do a 1-2, this is what we usually work for. We're right here at the high volume node. A lot of things kind of suggesting that that may be the bottom on that. Look at that weekly. I didn't notice this. Weekly's got bullish divergence right here between waves A and C. And weekly Stochk RSI bottomed out down here in oversold. So again, should be looking to kind of pull this up. Monthly is just about to dip into oversold, but it hasn't. I mean, this is the lowest monthly we've got here. And the highest volume coming off there. But we are well oversold here. I think we're bottomed out in Stochk RSI, yeah. So I think there's a real good chance that this might be the bottom or right around this area. And then potentially kind of rallying up from that maybe. Good possibility. If TLT goes up, remember guys, these are the long-term treasuries. So, you know, when these go up, it's because people are fearful of the market, right? And so, you know, they take their money out of legacy, out of their risk, and they go risk off and put it here in these long-term treasuries. And so this is long-term treasury bond ETF. So, yeah. So we'll see. We'll see if we can get that rally up and off there. There's a lot of volume coming in. You know, it looks good, right? The volume back here in March, the monthly, was almost the same volume we had at the at this all-time high here in March of 20. Remember, March of 20 was that crash, right? In the legacy markets and everything. And dollar went up, made new highs, and TLT went up and made new highs. Remember, both of those show that there's risk off, that the environment in the markets are risk off. So they're taking stuff out of the risky assets, which are your, you know, your, oh, what do you call it? Legacy, you know, your stocks and everything, crypto, stuff like that. So we'll see. We'll see how it plays out, right? But I think, you know, again, there's no real change from anything I've been talking about. It just seems maybe even more aggressive right now. So we're going to have to see how that plays out with it. What does that mean for Bitcoin? You know, again, last week I talked about, so if you did miss that, you know, you can check last week's streams there on Twitch and YouTube. But I talked about how we could possibly have the DXY continue to rise and Bitcoin continue to rise as well. Finish off maybe one more leg up. But we'll see how it goes, guys. Remember, this is the first time that that Bitcoin's been in this environment. So nobody really knows what it's going to do, right? So play it locally. If it keeps moving in the direction that you think it's going to move, then you can start expanding and playing it more globally. But I don't think you just jump in and go, right now I'm going short to zero or long to million, you know, kind of idea. I think really we're just going sideways for a year plus now. Take your time in it. Don't be in a rush, guys. Stop trying to make $1 million yesterday with $1 today, right? All right. As always, guys, really appreciate you checking in. You can join us here at howtotradetowin.com. Just go right up there to join us, or you can scroll down the page here as you get down there, and it'll tell you what the different tiers have with them. But again, you know, I'm not here just to take your money, guys. And so be serious. If you're going to join us, especially with tier 3, just be serious about it. There's so much content. You can get so far ahead as a trader in just a month even. But you have to be serious about wanting to absorb that content. Because it's all going to be there. I can't force you to look through it, guys. But you can get through as much as you won't be able to get through it all in a month, but you can get through as much as you possibly want. As you can, you know, push yourself to do. And you can be a lot better off as a trader than just trying to figure out where are those half-truths and outright lies that you see all over online, right? Okay, guys. Hey, you guys are great. As always, remember, the only thing you control in the market is how much you lose. That's absolutely it, guys. So risk management remains the most important thing you will ever do as a trader. The most important thing you do day in and day out. Don't let anybody tell you otherwise. Stop listening to people that tell you not to have a stop loss. People that tell you that are people that don't understand how to use a stop loss effectively and appropriately. Okay? If you're using stop losses and you're constantly getting stopped out, get some help. You're not understanding the structure of the market where you're at. That's all. You can learn this. You can do this. but it takes effort on your part. Okay, guys? All right, we'd love to see you over at over there at Discord and whatnot. So if you join us, man, wave in the channel, say hi. We'd love to meet you. You've seen some of our members already online here. They're great people, man. Really helpful. It's not just me. See, that's the great thing about what we do. So many of our people have been with us for so long that they're very capable of answering your questions as well. So it's not just me, it's them. And we've got people from all over the world. So, the chats kind of move all day and all night with everybody. So there you go. But if not, guys, I'll see you guys on Friday at 11 a.m. Central Standard Time, right? All right. You guys take care. We'll see you then.